Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back. Let's keep up with the analysis of the gold market. Market keeps bullish, positive sentiment, positive setup right now. And if we said previously, so actually we are watching for two possible scenarios. First, we have decided to play with this, let's call it as short-term, with a very small retracement, direct upward continuation. That could take the shape of some butterfly pattern or something of that sort. So in general, this scenario suggests upward continuation without breaking of this retracement shape, retracement range. So with some starting of the upward action while market stands above the 1855. So this is our first scenario that we are dealing with currently. Second scenario suggests deeper retracement, some kind of the ABCD back to the 1820 area with the confidence support, daily oversold, so approximately the same level we have on the euro currency as well. But based on the price action that we see right now on the Great British Pound and the gold as well, it seems that market more tending to show direct upward continuation rather than deeper level, at least based on the technical picture that we see currently. Maybe some data release will change something, but at the current moment, I would suggest that based on the price shape, I would say that gold is preparing to upward continuation immediately. Why? So, first of all, I would like to show you the picture of the interest rates. If you remember, we talked about 153 target previously. It has been reached, and we said market probably will challenge these lows, will break it down. And now take a look what has happened. Market has completed as the bottom line, is the 153 XOP with this major ABCD pattern, but reaction was very small and then standing lower, trying to proceed lower. So this is not common to the targets of such scale, so where you could see simultaneously bullish reversal pattern with the completion of the important target, and the market will show just minor funny pullback and then just continue move down. This is not typical for price behavior. So usually market shows more or less reasonable reaction on this area. With this downside action, since some pressure exists that market is finally were assured by the Fed stubborn position with the whole keeping interest rates flat with the Janet Yellen speech in the G7. So they probably currently capitulated with the chances and attempts to reverse the market with the statistics that we have, because statistics stubbornly shows the inflation rising, while Fed stubbornly denies that inflation is rising and keep interest rates low. And it seems that just investors are giving up currently, and as Fed said that no inflation, it means that no inflation, and we just selling buying the bonds, selling the interest rates. So, as you can see, this dynamic currently that we have. This is gold supportive action. On the forex market that today we talked about on the Great British Pound, also some signs of the bullish context. This market is preparing for moving higher. So it seems that's common thing currently for many assets. On the 4-hour time frame chart of the gold, what do we have? Here, I think that we could keep an eye on the grabber. 4-hour time frame chart, and once it will be formed, right from here, it's possible upward action could start. At least this pattern might be important based on the recent type of action that we see. Recent type of action, although we suggested that it might be the hand shoulders, and by shape it looks like the hand shoulders, but the price behavior is absolutely not bearish, and it more, I would say, some kind of the triangle is forming or something of that sort. Because when the market shows bearish pattern, it behaves differently. Here we do not see any bearish behavior. And it more looks like the consolidation after the rally. This market stands just flat for some time. So on the hourly chart, you could see what we've got actually. So here is market retested the confidence support that we already mentioned As we said, it's another chance to go long. It's around 1885. This might be a good position, at least for a first touch. Market should show the bounce, and indeed that has happened. Very similar to what has happened right in the beginning of the week. Reaction at the completion of the XLP, and that's also the 618 resistance, as we mentioned recently. As you can see, it's very gradual. This is not the bearish type of action, not bearish reversal, especially here as you can see the rally. So theoretically, you could recognize some hint on the shape of the hand and shoulders. But the price action and by the background, the market mechanics, it doesn't care the feature of the bearish pattern, which means that currently it would be better to not consider taking the short positions. If you saw a chance to go long, you probably could keep an eye on the same support area that we discussed, as you could use it with the initial stop somewhere below this level. And you could keep an eye on the grabber. So maybe you could try to possess yourself even based on just grabber, placing with a very tight stop, but probably it will be a bit more risky because you just will not give market room to breathe. So anyway, overall view is that chances on the direct upward continuation here looks better than possible deep retracement, just because overall the nature of the price behavior here doesn't carry any bearish signs.